Hey traders, welcome back to the channel in a new educational video. Today I'm going to quickly go over one of my favorite reversal price action patterns that I like to use and what it's called. Well, it actually has several names, but most commonly known as a triple thrust, triple drive, 3 taps, etc. Okay, and I'll just show you how you can use that to potentially identify reversals in the markets, both on higher time frames for like swing trading, or even on intraday charts for your day trading. Before we start, as always, make sure to subscribe, hit the thumbs up, and you can check out my the description in the video for information on all my new trading course bundle and the individual courses I offer, plus also a lot of discounts in trader funding companies. It all goes to help the channel keep growing and bring you lots of new content every week. So the triple drive is very simple in its concepts. It's basically when you see markets doing 3 continuous pushes either to the downside or to the upside, and then a lot of times these pushes are going to indicate that there's a market exhaustion and there's potentially going to be some kind of a breakdown or a breakout, depending on which if you're near a top or near the bottom of a trend move. Okay, so I'm going to go over several examples here on different markets and different time frames just to show you the gist of this. After the video, I recommend you just go and back test, look at the charts, and just try to start identifying these levels. Obviously, it's very easy to just draw like a perfect diagram of what a pattern should look like, but it doesn't always look as clean as this, and it doesn't mean that it's always going to happen. Sometimes we have markets that will just keep pushing 4 or 5 times in the same direction without falling, like we've seen that recently, like in the S&P 500 and the NASDAQ, for example, that are making all-time highs. But let's go over how I use this. So this is a Euro US dollar daily time frame. So in this case, this is something you could have used for more like a swing trading, long-term trading. And as you can see right here, we had the market pushing up, and we had 1 push up, 2 pushes. Here you can see even within this, you actually had 3 pushes on their own here as well. 1, 2, 3 right here within the second push of this higher time frame structure. If they're all like together like this, then I would consider them just as 1 push when I'm looking at the chart, on a higher time frame like this. But you can see how we had 3 continuous pushes to the upside, and then that led to a big breakdown. You can also do, like in this case, you can put on like trend lines, and then once you have the break of a trend line, then that can confirm as well the breakdown. The problem with waiting for a trend line to break is that look at all the move that you've missed, and you could have gotten a little bit of it, but it's also you're going to be shorting near areas of support like right over here. So the way I would trade this is just wait until you clearly see a break in structure. In this case, probably it would have been like right here. Once you saw this breakdown from here, then you can say, okay, we've broken structure now with a lower low, for example. And the one thing I use, which is the only time that I use ever a MACD indicator, you can use other oscillators, like you can use RSI, etc. But I like to use a MACD, and it is to spot divergences, because the MACD is a momentum detecting indicator, And so what I want to see when I do this is I want to see the market pushing in one direction and the MACD indicating that there is some weakness happening in the market. And you can see right here, we had 3 continuous pushes up on this market, and yet the MACD, you can see within the second and the third, we did have the third was higher than the second, but between the first two, there was clearly a divergence to the downside. Okay, and one thing that is worth noting is if we're near a top, so we're measuring a triple drive for a bearish break in structure, we're going to be measuring from the tops here, so we're going to measure the tops of the MACD. You don't want to be measuring the tops here and then looking at the bottoms over here, okay? You got to be top with top and bottom with bottom, okay? So that's an example there on the daily time frame. If I go into the hourly, here I have a little example that happened back in December. And you can see like right here, this market, let me bring this down a little bit. Let me make this wider. And you can see market was clearly coming and pushing up. We had this very impulsive move. We had one push up, a little retracement, a second push, which was pretty much like a double top, and then a third push right over here. And then in this case, you know, this would have been a nice one to do to measure a trend line break. I'm going to zoom in so you can see this better. But here you can see how, you know, we could have had a trend line like this right here. And you can see we just had a very clear break, a nice retest, and then we continued down. And then looking at the MACD, you can see we're making higher highs on price, and the MACD is making lower lows. So that indicates that this third push especially is losing the buying momentum, this losing the buying aggressiveness, and that can be a signal that we're potentially going to be pulling back. Next, let's look at an example on NASDAQ, which just happened actually this Friday. The market is closed now. This is the futures market, but this just happened on Friday. And in this case, you can see that, you know, you don't always get a very clear divergence, because in this case, you did have market pushing down and the MACD was also pushing down. But you can see how we have let me get this. We had 1, 2, 3 continuous pushes down, and then that led to a nice reaction up, okay? So when you're looking at little ones like this, you know, this is especially useful if you are day trading. So if I go into like a 5-minute chart and I bring this up, you can see that we had the 1 push, 2 push, 3 push right here. And then this area coincided right here with this gap fill and this retest of this resistance that we had from 2 days ago in the regular trading hours on this impulsive move, which this actually happened during FOMC. So we had big fundamental news here that drove the market higher. And you can see how we have 1, 2, 3 pushes. So if you're trading like on the lower time frames, and this happened within the extended hours. This happened right before regular market hours open, but you can see even when the regular market opened, we came right back to this same level of support, and then we held it, and then we had a very nice trend move up for most of the day on the regular market hour sessions, okay? So obviously context is very important. When you're looking for that third push, you want to try to see on your chart. Is there any historical support resistance level? Is there, a big volume profile level that I can use, that I can lean on, etc. Here on the S&P 500 intraday, we have here similarly, we had extended trading hours. Market is pushing up, and this is right around 8 a.m. Eastern time, so an hour and a half before regular market hours opens. One push, market opens, and we have a second push up, and then a third push up here for the first hour, the opening range of the market. So 1, 2, 3 pushes up, and then you can see a very clear bearish divergence here as well on the MACD. Here we could have had like this, we were forming this trend line moving up. We broke down from it, and then we had, it's pretty choppy, but overall we had a bearish day right over here. If I pull back, okay, right here, this one, just like with the past example I showed you on the NASDAQ, we have the exact same thing that happened on the S&P, only this one happened during regular market hours. We had one push up right around 8 a.m. We had this gap right here into this resistance area that happened during FOMC. 2 pushes down, and then a third spike, which happened right over here at 12:30, pretty much right around lunchtime. But you can see how we had this 3 continued pushes down on the 5-minute chart, and the MACD was making higher lows. And then here we had this trend line coming down here, and then we had a clear breakout. And if you're day trading, this is going to be a very, very nice move that's going to give you, this was about a 15-point move right here, which, for day trading, that is a really nice chunk to catch. Then we can use this again on higher time frames. This is the Bitcoin chart on the daily. This was all the way back in 2021 when we first made a new all-time high at 65,000 or so. And you can see very clearly here, 1, 2, 3 continued pushes up here, and the MACD making lower lows. And then we had a very big breakdown from here. You can see we also had a very pronounced trend line here that was broken as well to the downside on that move. Okay, so here, just to zoom in, again, this was in Bitcoin. And then finally on gold, we can see the same thing. This is a 1-hour chart. Now, some markets, it's not as clear always. Like here, we had this move up here, but if we look to the left, we had a lot of resistance at this area. So I would consider this to be just a range, or, this was a breakout on this move. We had this clear resistance level for several days that we finally broke out of. And then we had 1, 2, 3 pushes up. And then on this third push, you can see we had this 2 swing highs, and we did a false breakout, and we closed back inside of these levels. So the third push happened to be a false break of 2 very significant spikes up that we had in the market. So there you have the 3 moves right over there. And then if I bring up here MACD, you can see that we did not have a very strong divergence. Between the first 2, there was actually no divergence. Then on the second 2, it was pretty much like flat, okay? So even though it is not directly a bearish divergence on the MACD. As long as you see this flat and price making a higher high, that's already showing us that there's some lack of momentum and of aggressive buyers coming off of the top over here. Okay, so that's pretty much it for the video. Hope you all enjoyed it. Make sure to subscribe, hit the thumbs up. If you want to learn a lot more about strategies and patterns like this, you can check out all my trading courses where I go into a lot more detail on all these concepts. And I will see you all in the next video. Take care.